Position sizing is the name of the game. It's everything. Holding a winner, selling losers, when to be bigger, when to be smaller is going to dictate your career, not your stock picking. Tesla between 107 and 110. And I looked at it and I said, this stock is going to be $150, $200. And I'm very comfortable. Fundamentals had not turned over yet. It was really a function of interest rates and what was going on with the macro picture that took it down, right? The company had not fallen apart yet in terms of sales and so on. So I took a really sizable position, including my wife. What ended up happening is in a matter of 1 week, it bounced to 140. And I simply said, I'm up 40% basically in a week. Like, that's crazy. So I simply said, look, if a stock can be up 40% in a week, that's absurd. I'll get another chance. I sold all my stock. My wife held it. 3 months later, she sold it at 230. I sold it at 140. Let's say you bought 2,000 shares of Tesla. And let's say your average was 105. And let's say you sold 1,500 of it at 140 and you just held 500 and then it goes up another 100 points. Guess what? You make as much money on your trailer, right, as you would have on the 1,500. Holding some of your winners is the biggest lesson. Because I'm a decent stock picker, it's been more of that than taking losses. Actually holding a decent amount of your winners and letting them run. So ultimately, the difference between success and failure is actually having the conviction in your calls and sticking with some of them, and actually having a thesis and then saying, I'm sticking with it. Now, that doesn't mean sticking with a loser and buying more as they go lower and lower, but sticking with winners that, whether they be small cap or whether they be brand names in Mag 7, there's nothing wrong with holding a portion of your winners. It's really how you get rich. That's really how to trade right now without just taking upon too much risk, is to understand there will be laggards, there will be leaders, is not to drink the Kool-Aid and chase, because when everyone thought NVIDIA would never pull back at 140, then in a period of what, 4 days, it went from 140 to 116. So they will come. Our job as money managers is to be patient and wait for them until they come, because there will be those spots. Everything comes down to doing bigger size of your best ideas, that cute trades, if they're not appropriate for your account, meaning that they're high risk or that there's not a clear setup, you can skip them, right? Or you can even wait till I'm in tremendous pain and down a lot and say, wow, I love it here. I wish I didn't start so early, something like that. But there are certain traders that should just sit on their hands and wait for the next idea, because all you need to worry about is making that next 1,000 or 2,000, because when you compound that over by a month and a year, all of a sudden your account is no longer that small. I get small when I feel like, one, maybe I'm forcing things or doing something cute, right? And I frankly get big when I really feel I have a thesis that is not already out there. In other words, like, I'm not just joining the trend and midway through or late, that I really have some sort of edge that dictates the upside is 2, 3, or 4 times greater than downside, is probably the best way to say it. If I deem the upside to be 2, 3, 4x what my downside is, that's where I take a stab. So I have to figure out how much I'm willing to lose if it goes down 100%, which, by the way, a lot of people don't do with options, and you need to. Let me quantify, if this option goes to 0, this is my max loss. So I remember with SMCI, I had a lot of stock short, but I also looked at the puts and I said, okay, I'm buying these $3 puts, whatever they are. If they go to 0, how much am I comfortable losing? Because they might go, I remember thinking they might go to like 15 or 20. I didn't think they were going to 150. And that's how I really size up on something, is when I can envision that the upside is just far greater. And more importantly, maybe that at least short term, I can quantify the downside and go to sleep at night. The whole key with options is to not like treat them like stock and just think, well, it's an option, right? I'm going to buy hundreds of them, because quite frankly, they erode. So I always have, whether I'm buying something on the way down, I have a target that it might get to, like in CMG's case. I thought, oh, it could get down to 59. I have to leave room. I'm just giving recent ones. And in Tesla's case, oh, this could get to 265. I have to leave room to buy puts. And then I look at the total amount and I say, if I lose that, will I be able to, be successful this week, live with myself, live with the check? Will I be happy? No, I'm not going to be happy. But can I live with it when I think I'm wrong or too large? I've taken too big a position, or I'm wrong. Like the news says I'm wrong, the chart says I'm wrong, I take a loss. And then on options, I can be right. The news flow can say I'm right, but not have enough time. And if you don't have enough time, then you also have to know, well, maybe it's not worth gambling. I got to take a loss. Yeah, I do believe that alpha is created by less positions and sizing up on the right ones. I'm 1,000% believer that anyone who has a smaller account with 30 or 20 positions is going to always be relegated to the success or lack thereof in the market. And the way we can control some of that, we can never control anything, but control some of that is by less positions and less size at times where there's nothing to do, and more size where we feel there's something to do.